Exercise 21-40, sales mix, break-even point for two products. So in this question, we're gonna find the break-even point in units, but we are gonna have more than one product, okay? So let's read the question. Stewart Scooters plans to sell a standard scooter for $120 and a chrome scooter for $160. So this is the sales price. Okay, for the standard it's gonna be $120, for the chrome it's gonna be $160. Now Stewards purchases the standard scooter for $30 and the chrome scooter for $40. So this is the cost. This is the variable cost because it's given per unit, and this is the sales price. Stewards expects to sell one standard scooter for every 3 chrome scooters. So he gave you the sales mix or the ratio. It's gonna be 1 to 3. Stewards monthly fixed costs are $85,500. So this is the total fixed cost because it's monthly. So this is total fixed cost. Okay. Now, requirement number 1, how many of each type of scooter must Stewart scooters sell each month to break even? Okay, so he's asking for the break-even point in units. So the equation for the break-even point that we used to use before, it's break-even sales in units, it's gonna be total fixed cost plus profit or income divided by contribution margin per unit. Okay, so at break-even point we know that there is no profit, it's gonna be 0, and because we are gonna have two products, not only one, instead of contribution margin per unit we're gonna use weighted average contribution margin per unit. Okay, so we're gonna find the weighted average for the contribution margin per unit. So first, let's find the contribution margin. We said it's sales price less variable cost equals contribution margin. We have standard scooter and we have the chrome. Okay. So the sales price for the standard it's gonna be $120, while for the chrome it's $160. Variable cost it's gonna be $30 for the standard and it's gonna be $40 for the chrome. So 120 less 30 it's gonna be 90. 160 less 40 it's gonna be 120. Okay, so these are my contribution margin per unit for the standard and for the chrome. Now we said we're gonna use the weighted average contribution margin. So weighted average, I'm gonna find the total then divided by the number of units. So as you can see, if you add the 90 to the 120 you're gonna get what? 210. If you divide it by 2 because you have two products, your answer will not be correct. Why? Because the ratio it's not 1 to 1. If it's 1 to 1 you can divide by 2 to get the weighted average. Okay, but the ratio here it's 1 to 3. So I'm gonna divide by what? 4. Okay, so first I need to multiply it with the sales mix to find the contribution margin taking into consideration this sales mix. So it's gonna be here 1 and here it's gonna be 3. So we multiply it. So 90 times 1 it's 90. 120 times 3 it's gonna be 360. Okay, so now I need to add them up. 90 plus 360, it's gonna be 450. And again, you need to divide it by 4. So the weighted average contribution margin per unit, it's gonna be 450 divided by 4. So it's gonna be 112.5. So this is the weighted average contribution margin. Again, we divided 450 by 4. Okay, so now let's find the answer for requirement number 1. Break-even says in units. Okay, so it's total fixed cost plus 0 divided by the weighted average contribution margin. The total fixed cost is 85,500 plus 0 divided by 112.5. So it's going to be 760 units. 760 units. Now, 760 units, is it standard or crumb or both? Actually, it's both. Okay, so to find how many for the standard and how many for the crumb, I need to multiply it with the proportion. So for the standard, 760 multiplied by what? 1 divided by 4. 1 divided by 4. And for the crumb, again, 760 multiplied by what? 3 divided by 4. So here it's gonna be 190 units. And here it's gonna be 570. So if you add them up, you should get 760. Now requirement number 2. How many of each type of scooter must stewards scooters sell each month to earn 67,500? So now he's giving you a target profit. Okay, he said to earn. So this is a profit. So instead of 0 profit like the break-even, like we did here, okay, you need to write 67,500. Okay, so the equation will be target sales in units equals total fixed cost, which is 85,500, plus the target profit, which is 67,500, divided by the weighted average contribution margin, which is 112.5. So 85,500 plus 67,500, it's gonna be 153,000. Divided by 112.5, it's gonna be 1,360 units. So again, he said how many of each type, so you need to multiply it, standard and crumb. So for the standard, I need to multiply 1,360 times 1 divided by 4, again 1 here divided by 4, the total. Then for the crumb, it's going to be 1,360 multiplied by 3 divided by 4. So you're gonna get 340 units for the standard and 1,020 for the crumb. So the total should be 1,360. Hope that it's clear. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.